Can we take it across to Pankaj Tibrewal? Okay, he's there on the show right now. Pankaj, hi, good morning. Good to have you on the show. Hope all's well.
Absolutely, Aisha. It's all good. My apologies for a bit late. Bombay
No, no.
traffic let you come in fast.
No, not a problem. Was just checking on with that because of that. Pankaj, how are you dissecting now IT? Because on one hand, you have a TCS, and then on one hand, markets rewarding Infi the way they are, given that slight bit of outperformance also. What do you do with IT right now?
I think from a IT services perspective, few results which have come out clearly shows that growth momentum is um, okayish, not too bad, not too great. And margins, I think they have been holding on well. Order wins have been quite decent for a few of the large ones who have announced the results. But longer term outlook, and if you take a medium term outlook also, that it would be a single digit growth for most of the large IT companies. I think the way we are looking at is that some of the mid IT and the small cap IT names could see accelerated growth as some of their clients, implement AI and they are also able to pivot. So our preference among IT from an overall perspective would be towards faster growing companies which resides in the mid cap space. And if you look at this space over the last every 10 years, there are some new winners which are discovered. So in this last 10 years, you saw Persistent, you saw Coforge, and you saw a few of the others getting discovered by the markets and who had a faster growth consistently for many, many quarters. So that's how our approach would be that in the IT sector, I think mid caps, though the valuations are a little prohibitive, but still the growth can justify those valuations.
Pankaj, so how do you pencil in a growth for this sector where the mid cap IT companies are growing at a different pace compared to the large cap?
Yeah, so that's what I said that large caps would grow at best single digit, maybe between 5 to 8%, depending on the names. And there are many mid cap companies which can grow in double digit because their base is low and they are having strong client wins. They are implementing AI in many areas along with their clients. They are able to be more agile and nimble in their workforce. So I think when you look at those aspects, I think that's giving them faster growth and geographical expansion. But obviously, after a certain while, when they achieve a scale and size, they will also have the same problem as some of the larger companies are having right now.
Do you see Indian IT able to transition itself into a AI-enabled tech services company over the next few years, or it's going to be a long, wait for investors?
I think if you look at my only, a little bit of disappointment with the Indian IT has been that over the last decade, when you had a lot of cash flows, you largely distributed it through buybacks or dividends. But very few companies could have reinvested those back into the new generation disruption, and we couldn't. And I think we missed that plot from a last decade perspective. Going ahead, I think I don't see services companies pivoting themselves very significantly over a period of time. And I think from a longer term perspective, there will be few new IT companies which will be discovered, which probably I think can take the battle. So we need to be clear about that large IT services company. It will be difficult for them to completely do a 360 U-turn, but there will be smaller companies, I think, which will be discovered over a period of time, which will have a more AI play.
Pankaj, how are you reading into the capital marketplace? Impressive numbers. I was just looking at that from an Angel One, from ICICI Pru AMC, 361 WAM, all of it.
So I think over the last 5 years, one segment which has got discovered is this non-lending capital marketplace across AMCs, depository, exchanges, distribution platforms. So I think they are doing quite well. And some of them have shown very strong numbers even in this quarter, despite of very little mark-to-market gains, led by strong inflows. So I think it's a very a good way to play the markets, though the beta is high. In some cases, the valuations are also not very cheap. But if you take a 3-5 year call, I think some of the way we are playing in the portfolio is through a mix of exchanges and few other capital market plays, where we believe that the franchise is very, very strong and they will be beneficiaries of a rising market over a period of time.
Pankaj, another sector which is in the eye is the private banking space, HDFC and ICICI. The earnings are expected on Saturday. How do you look at the private banking space? And within that space, how do you look at some of the top 4 or 5 banks?
So in the private banking space, we have a positive bias right now. We believe that the NIM contraction, which we saw over the last few quarters, is behind us. Few of the banks, not from private sector but public sector, declared numbers, and the most heartening fact was that despite of that, loan repricing, we saw NIM expansion in all the 3, 4 names which have declared numbers, and which led to ROA expansion also. In the next year, FY27, we believe that private sector banking would be a 20% growth, kind of a story. This year would be a more of a consolidation year as they reprice their loans, and next year the deposit starts getting repricing on the liability side. And we believe that earnings growth should start to resume in the large private sector banks, and we have a positive bias towards them in our portfolio.
Pankaj, what about the more fancied trades right now? Metals. Does it seem like it's getting close to its peak, or do you think it still has further headroom to go?
So we are positive on hard assets for a long time, Aisha, and we believe that this is a very structural change which is happening globally. Don't forget that now commodities are used as a geopolitical negotiating tool, and resources are concentrated in few countries, and supplies are concentrated in few areas, and which is leading to a lot of these countries having an upper hand in terms of supply. I was just looking at some data, and you'll be astonished to know. Take, for example, copper. Um, the last 10,000 years, we mined about 700 million tons of copper. Our sense is, even at the world grows at 3% GDP, the world would need as much copper as we have mined in the 10,000 years in the next 18 years. And there isn't too much of supply coming because every new mine, right from holing to getting the output, takes about 15 to 20 years. So we believe that there will be certain areas like copper, for example, then aluminum, for example, demand supply balance is very tight. And as the world transition towards more of EV, towards more of wind and solar, the copper content is going up. So there is a demand and a supply deficit, which we will see over the next 10 to 15 years that should keep most of the commodities bidded up. So we have a positive view towards hard assets for last 12 months. We continue to believe that over the next 2, 3 years, one should have some component of hard assets, which could be a combination of precious, non-ferrous, ferrous combination in your portfolio, which will help you outperform going ahead.
But Pankaj, tell me, when will all this earnings recovery and growth, etc., reflect in the index per se? Because I mean, if you just look at the index level, that's really not going anywhere. And mid and small caps, as such, at an individual portfolio level, have underperformed all through last year.
So absolutely, Aisha, your observation is correct. So if you look at from July 2024, actually small and mid caps are negative. So it's been almost 15, 16 months of hibernation, which the markets have seen without any meaningful return. This has been a price correction as well as time correction. The reason I say price correction is because index is showing one return, but if you look at the breadth of the market has been very bad. So NSE 500 index is 2% away from 52-week highs, but the breadth is so bad that when the average median drawdown is 20% from the 52-week high. And in small caps, it's about 25 to 30% average drawdown from 52-week highs. So the breadth has been bad, and I think it's been a great time as well as price correction. Consolidation has happened. What is incremental changing, Aisha, is that next year, our belief is that the earnings growth from a Nifty perspective will move into double digits. And that will be led by banking, part will be led by auto, and in some of the power names and other sectors. And once you see a double-digit kind of earnings growth, I think markets will start tracking that. Uh, in the second quarter, you saw that mid and small caps delivered very strong earnings growth. The earnings growth in the index level was about 30% plus, compared to 8.5%, 9% for Nifty, and about 15% for Nifty 500 companies. So I think we have started to see incremental changes, which is positive on earnings. And I think if that sustains, you will start to see stock prices finally reflecting. And don't forget that we have seen the one of the highest FI selling in the last year, about $19 billion. We saw the withdrawal in the calendar year 25. I think once you see some, disruption on the AI narrative in the US, markets will find some flavor to India back again. And I think that is our hope this year, that FI should resume their buying. It should not be the same amount of selling which we have seen in 2025. And if that happens along with earnings growth coming in, I think that should be a good news from overall market sentiment perspective.
Okay, Pankaj, it was a pleasure talking to you today. Thank you very much for joining us today.
Thank you so much. Thank you.